Maverick traders, welcome out to your trading room as we prepare for the week ahead, October 21st through 25th. Corey here with you. Now, we're always going to take a look at meaningful news from the past week. We'll look at the broad markets. We'll make a game plan based on sector scoring. And then we will identify some specific trade setups. We'll talk about the risk, reward, probability related with those.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, so as we prepare for the week ahead, we've got to first look in the rearview mirror and take a look at what was happening. So the March continues. We've touched on this. Look, we're in an uptrend. Sometimes you don't need to complicate things. You just kind of go with the flow, and that's been the message of late. Dow and S&P hitting new all-time highs. NASDAQ just about 1% shy of that, but did get a little closer this week. The Russell 2000 is right at the highs as we speak. Economic reports, there wasn't a lot this past week. There won't be a lot next week. We did get some retail sales, which beat. The core retail sales number beat handily at 0.5 versus the 0.1 expectation. And then as far as earnings season is concerned, it really kicked off with financials. They always report first, JP Morgan, Bank of America, Citigroup, and so forth. And they passed the test. No major declines, beats on the top and bottom line for most of those corporations. So as we look at the economic events, there just wasn't a lot in place here. The ECB out of Europe did cut rates by 25 basis points. So we're seeing central banks around the world, not just us here in the Federal Reserve in the US, but central banks around the world are cutting rates. Now, as we look ahead, you look at where the market's at, and there's really not a lot on the economic front to derail this. I mean, we have some earnings results. We'll have large cap tech coming, but the markets are fine. For this week, we were up about 1% across the board. The Russell was better, certainly outperformed at +2. Now, oil got slammed. Remember, oil kind of shot up on expectations that Israel may go after some of Iran's oil infrastructure and so on. Israel came out and said that they will not do that. So for now, that really caused oil to collapse right back down. It was kind of a big spike on that fear and then a big collapse back down as that fear has subsided. Gold still strong, up 2% for the week. Now, if we look at these charts, a little bit of a consolidation week. Certainly we chopped around a bit, but nothing that says this trend is coming to an end. I mean, that's pretty good price action in terms of taking a little rest, and we can just continue to march on. Now, at any point in time, could the trend stop? Very possible, but what often happens is that there's a big rally to finish this thing off. There is a spike that gets extended away from moving averages and so on, what we would call an exhaustion move. And there's nothing here that really screams of exhaustion. I mean, you had a little bit of a concern here with the bearish engulfing, and then what did the market do? It just shook that off. So I don't see anything right here, right now that's screaming run for the hills. I mean, the NASDAQ looks like we're on the cusp of making new all-time highs. We're a little bit shy of that if you were to go back to prior highs. They're just a little bit higher up here, but ultimately we're kind of testing those waters as we speak. Now, if we look at the heat map for the week, certainly healthcare was a laggard this week. Energy, no surprise, was a laggard this week. I mean, if oil prices are down 8% on the week, you're not going to guess that the energy stocks are booming to the upside, right? If you look inside of tech, maybe a little bit more weakness in semis there, but NVIDIA, the biggest of all semis, was still pretty strong for the week, up 2.5. We really got earnings results from financials, and you can see pretty much bright green across the board. So financials pass the test. Utilities continue to be very strong. The news in utilities, it continues to be these new build outs of nuclear energy. And the biggest corporations doing that, they are really signing contracts with the large cap tech names. Microsoft has a deal in place with CEG. We just saw Amazon come out with a new deal, Google come out with a new deal. So they are creating nuclear plants, and large cap tech is doing that because they see how much energy they're going to need for AI needs in future years. And they can also tout that it's carbon neutral, right? It doesn't leave a big footprint. So whether you believe in global warming or not, that is why they're doing what they're doing. And as market participants, we care mostly about where the money's going and trying to take advantage of those opportunities. So, bullish market environment, politics are going to remain in focus. Velocity is still to the upside, but slowing. We can definitely say that last week slowed down, slowing into the election, not quite the same pace. Could there be the big blow off top? It could happen, and certainly when you have a really strong year to date performance, you usually finish the year strong. The reason I think this year is a wild card is the election, but historically speaking, it hasn't mattered long term who holds the office of president. Now, I know that that seems controversial, but look, when Obama won, all of the Republicans said, oh, the market's going to crash, and markets went higher during that period. And then when Trump won, all of the Democrats said the market's going to crash and he's going to be terrible, and the markets went higher. So, historically speaking, it's an overreaction to play too much into that, but will there be volatility around those results? You bet there will. GE, PM, TXN, Texas Instruments, Verizon, some big companies reporting on Tuesday. IBM, Coke, Tesla, T-Mobile reporting on Wednesday. Amazon, Honeywell, Union Pacific, UPS on Thursday, and Colgate on Friday. So we're not massively into large cap tech, but you can certainly see that Tesla's kind of a tech company, Amazon kind of in that tech space. And then not this coming week, but the following, we'll get Apple and Google and some others. So we're going right into, I would call it the heart of earnings season right here, right now. Now, on the economic side, again, I told you there's not a lot going on this week. We've got a Bank of Canada meeting. They're expected to cut rates by 50 basis points. Here in the U.S., we've got some manufacturing PMI, services PMI, but there's nothing really on the economic side to worry about. So, are we still in that upward trend? Yeah, we check all the boxes of a bullish uptrend. And again, no major reason to kind of be super cautious. We'll just go with the flow for now. Sector analysis. As we break these down, most of them are certainly more on the bullish side. Now, you can see this week healthcare and energy lagged. Energy specifically very poorly. Energy down 3% on the week. Tech was a little bit of a laggard at flat as well, but there were only two sectors negative. That's energy and healthcare. Everything else strong, and most things pretty darn strong, you'd say. You know, plus twos, plus 3%, some plus ones. Pretty strong price action across the board. Now, if we look at utilities, we're back up here, and you could say a little mini cup and handle type of pattern forming. Utilities were one of the best performers this week, and as I said, this shift to nuclear energy is big for utility companies. They're signing multi-billion-dollar contracts. Again, at some point that'll all be priced into the stocks, but for now, enjoy the ride. The trend is lower left to upper right, and it checks very, very bullishly. As we look at communication services, a little bit of a consolidation of late, but ultimately above the 20, above the 50, sloping higher. A little bit of a consolidation, but where does this probably go? Again, look at how well we shook off this bearish engulfing. We have a bearish engulfing on Thursday, and then on Friday, you're right back up at those highs. This is a bullish market, and that's bullish price action. Here's a little fearful day, and it happened within a consolidation, and sure enough, we shake that off. So looks like XLC in the communication services sector should continue higher as well. Still pretty darn bullish. Nothing too major happening there. Real estate, well, here's one where we're a little ways below the highs. We're progressing higher, certainly, but not as strong. I mean, the 20 period moving average has kind of a downward or even sideways slope to it. So we give this one a +1. Real estate does not look as good. Still solid, but not wildly bullish. Now, if we move to the healthcare sector, the healthcare sector here looks worse than most. So notice the series of lower highs. Not great. A series of lower lows that have been in place here. Not great. We're in a little bit of a consolidation, but notice the 2050 crossover. There's just a little bit more happening to the downside here. 20 period moving average, which is the red moving average, sloping downward. It's not a runaway bear market, but it's certainly just a little more bearish than bullish. So we've got healthcare at a -1. There aren't too many sectors that have been trending lower the past few weeks, last couple of months, but healthcare has been doing just that. Industrial sector, man, this is a pretty chart. High base pattern in a strong upward trend. Industrials look fabulous. So look inside of that industrial sector potentially for some more trades. Look at the financial sector. Here we broke out and away we've gone to the upside. Again, it looks clean, it looks solid. Got to put that in the very bullish category as well. Above the 20, above the 50, sloping higher. Now, it could give you a little bit of heartburn that we're kind of extended away from moving averages, but I got to tell you, sometimes stocks like that just keep going and going and going. Now, if we turn to consumer stocks, not quite as bullish as some of the others. We're a little bit below the prior highs, but still above some rising moving averages. Certainly more bullish than not, but can't give it quite as good a reading as some of the other sectors. Technology, again, can't give it quite as good a reading. A little bit of a consolidation happening, certainly more red coming in, a little bit of a high volume spike, and it was one of those sectors that really lagged this week in terms of performance. So still bullish on it, but tech maybe not quite as bullish as some of the other sectors to my eye. That one would give me just a little bit more pause. Not a lot, but a little. Materials right back up to the prior highs. Looks like, I mean, what I would love in materials is maybe get a minor dip, a little cup and handle type of pattern, a little pullback and buying opportunity to get into that sector. But materials, I think, will essentially break out. If you wanted to put them in like the +2 category or something, I could go for that. But ultimately, you're above those moving averages, got the proper slope and so forth. Energy sector, here's a definite laggard. If you were to put a 200-day moving average on here, it'd be right in the middle here, along with the 20 and the 50. So you can see some lower highs, you can see some higher lows. It's just not going anywhere for here and now. So at some point, will it decide to move? Yeah, probably, but the energy sector is certainly lagging, and we've got that at a 0. So there's only one sector that I've got really graded bearish, and that's healthcare. You could put energy close to that category, but again, energy was kind of above some of those moving averages. So tech and real estate +1s, consumer at +2, utilities, industrials, materials, communication services, financials, all acting very strong and certainly more in the bullish category. All right, so let's come into our trade slots. We're going to lose an energy trade. We're going to lose a healthcare. We're going to lose a utility. We're going to lose a comm services. So it'll still leave us certainly more bullish. You can see we're losing a -1, a 0, a +1, and a +3, but we're losing, some areas there that if we want to maintain our bullishness but still have a little bit of a touch of that bearishness, we probably need to add something there. S&P still strong, still in more of that +3 category, so we want to follow our model of, well, when we're in a +3 in the S&P, we want to have much more on the bullish side. And a breakdown is maybe 2, 4, 3, 3. You can see, I mean, 2 in the +3, 4 in the +2, 3 in the +1, 3 zeros, 2 in the -1, and 1 in the -2. Certainly more bullish than not. That's our area, that's our focus. So what I've looked at is adding within those sectors and where it makes sense. Now, we're not adding a ton of bullishness by any means, but we're adding a little bit because we've got a 0, we've got a +1, we've got a -2, and a +3. It averages out to adding more bulls than bears, but we still wanted to get a little bit of that exposure of, some of the trades that we want to have, the desired trades. So as we look at possible trades, here are some candidates that we think make sense. Utilities remain bullish, and NextEra Energy is right in the heart of some of those trends that are happening. You can see this consolidation, this basing pattern that we've been in, and here we're just looking to play a +1 spread. So we don't even really need this thing to go higher. What we were looking at was the 82-84 bull call spread. If it finishes at 84 or higher, we've got a max gain. If it finishes below 82, we've got a max loss, and we think that makes sense in terms of this thing working its way back up to the highs and even a little higher. Remember, this sector is strong, and NextEra Energy has shaken off the downturn, and that's important. When you have a big bearish engulfing or big down day like that, you want to see it offset that pretty quick and pretty easily. And that tells you those buyers are simply not going away. So we've got NEE, not a mega bull, just a +1 type of trade that, assuming the stock can stay here or go a little higher will make sense. And +1s are pretty good for the utility sector because it tends to be a little bit slower moving sector overall. Communication services, here we've got T-Mobile. Now T-Mobile has been a rocket ship, and this sector's been very strong. Here we're adding a +3, so we're really adding an aggressive bull, and the trade is a November 8th 225 235 bull call spread. 225 235 bull call spread means that we need the stock to move up here to be successful. And the way that that trade looks in your risk graph is basically you'd have a breakdown. It's a good risk to reward because you're paying, it's a $10 spread, but you're paying $3 and change for it. So you've got a 2-to-1 reward to risk ratio. Now the way that this spread is going to look is basically something like this. That's how a bull call spread works, right? And your max gain will be if the stock gets to 235 per share or higher. And your max loss would be if the stock ends up at 225 per share or lower. So you want the stock to go up, and that's going to achieve this happy profitability. So in terms of the structure, T-Mobile looks like it wants to go higher. We've got a 225, 235 bull call spread and a way to capture some of that upside. In healthcare, we were looking at Merc, and you just don't find a lot of charts like this. Notice that it broke down back here and then recently had what we would consider to be kind of a kiss goodbye. You break the level, you retest it and fail, and now we're starting down again. Here we're looking at a -2 and just adding a simple, this should say November 1st. So we'll correct that. This is a November 1st, 110, 105 bear put spread. So it's a couple of weeks out in time, playing this stock to finish at 105 or below for max profitability. So we would need that stock to go lower in order to be successful. If it finishes above 110, we've got a loss. If it finishes below 105, we've got a max gain. Energy, last but not least, we've got Chevron. And Chevron, like the energy sector, really can't decide where it wants to go. It's got lower highs and higher lows, sideways, kind of bunched together moving averages. We were looking at this for a butterfly structure. It's just a zero trade. We could play the November 1st, 155, 150, 145 butterfly. And it really doesn't matter whether you use calls or puts. Just build them both. They should create the same risk graph, which is your profit, your loss, your stock prices. Here'd be your break even coming through here. And then you'll have a butterfly that looks something like this, right? And your max loss would be if the stock was either below 145 or above 155. And if you're in between those at expiration, that's your profit zone, right? So whether you use calls or puts, remember a butterfly is a bull spread plus a bear spread already. So it really doesn't matter which one you use, given that it's a neutral structure and you're trading it right here around 150. So you could build both, see if one can get you filled at a little bit better price and go with that one. But ultimately, a neutral trade targeting the stock to, while we expect it to move and wiggle, find its way back to 150. So the markets are bullish. If you don't feel it, sometimes it's hard to just go with the flow. You might have to plug your nose and continue to buy because you don't want to be left behind, and you most certainly don't want to just sit there and stand out in front of a speeding bus and try to make it stop and change direction. So what you do not want to do is go aggressively bearish before there's clear indications that that's the right trade. Sector analysis is key. Continue to use your trading plans as your guide. Manage risk well, and you should be able to flourish in virtually any market environment. Hope you've enjoyed today's trading room. Have a great week, everyone. We'll see you next time.